One of the most common questions I'm asked is how do I decide on which mining stocks to invest in? So I've developed a six-step mining stock selection framework that I follow. So the truth is I never buy a company simply because someone recommends it or because the share price is moving higher. I work through the same six-step framework every time, and it helps me compare companies objectively, identify strengths and weaknesses, and avoid many common mistakes. So there's no single factor that guarantees success, but together these six steps provide a disciplined way to analyse almost any mining company. So step one is the project. The project is always the starting point because without a quality asset, nothing else really matters. I look closely at grade because high grades usually lead to low operating costs and better profit margins. Next, I assess the size of the resource and whether it has potential to grow. I also want to know the expected mine life. A mine that can operate 15 or 20 years generally more valuable than one with a shorter mine life. And finally, I study the economics. I review the expected capital costs, operating costs, net present value, and the projected cash flow. And if the project cannot generate attractive returns, I simply move to the next opportunity. So step two, the location and infrastructure. Even a world-class discovery can struggle if it's located in a difficult jurisdiction. I examine the country, the political stability, the mining regulations and the taxation in that country. I want to know whether permits can be obtained within a reasonable time frame. And the other thing, infrastructure is equally as important. Are there roads, railways, ports, power, water available? Or must the company spend hundreds of $millions building them? Also consider the labour. Can a mine employ local workforce or will it rely on expensive fly-in, fly-out staff? So these factors have a major impact on both capital costs and ongoing operating expenses. Step three is the financing and value. So many excellent projects never become mines because the company cannot raise the money required. So I assess the company's cash position and its ability to finance construction. I also study the share price carefully, how many shares and options and warrants are on issue, how many and have the management diluted shareholders repeatedly. So finally, I compare the market cap and the value of the project. Sometimes outstanding companies can still represent poor investments if they're already overpriced. Number four is the management. Management is really important. So management is often the difference between success and failure. I prefer teams that have previously financed, built and operated successful mines. Experience matters because every project faces unexpected challenges. So I also want to pay close attention to the insider ownership. Directors who have invested significant amounts of their own money usually think like shareholders. So free options and are not the same as personal financial commitment. So I want management's interests aligned with mine. Step five is the path to production. So I always ask where the company sits on its development journey. Is it exploring or defining a resource or completing a study like a scoping or feasibility study? Has the metallurgy been proven? And are permits progressing? And is financing realistic? Does the company have the engineering, construction and operating team needed to execute the project? So understanding this pathway helps me judge both the remaining risk and the potential upside. Number six is the growth potential. I finally look beyond the first mine. The best mining companies continue creating long after their initial project is built. Can they expand the existing resource through exploration? Do they have additional projects in the pipeline? And are they financially strong enough to acquire neighbouring deposits or even take over other companies? So I like businesses that can grow for many years rather than relying on a single asset. Long-term growth often creates the the greatest shareholder value. So, in conclusion, when I analyse a mining company, I score each of these 6 areas before deciding whether it deserves further research. The framework keeps emotion out of the investment process and focuses attention on the factors that really matter. So if you would like to learn more, you can follow us on investment coaching and education, or IC&E. Thanks.